this will be the halving, but it will be the single most consequential halving in the history of Bitcoin, because you're talking about, it's the equivalent of someone coming in the market saying, I'm going to buy $8.5 billion of Bitcoin a year for the next 4 years, guaranteed. That's the demand impact, right? $8.5 billion, $23 million a day at the current price. Now, that's a huge amount, but more importantly, that's a huge demand-supply shift in the year when the demand via the ETFs has jumped by a factor of 4 to 10 times the daily supply.
MicroStrategy founder and executive chairman Michael Saylor believes Bitcoin is about to make history in 2024, particularly during the fourth month of the year, when the much-anticipated halving event will occur. According to Saylor, a renowned business executive and big Bitcoin bull, we are about to witness the single most consequential halving since the creation of the leading cryptocurrency over 15 years ago. So far, there have been 3 Bitcoin halvings, each reducing the supply of the cryptocurrency by halving the block reward, and all 3 have had significant impacts on price. But the 2024 halving will be like no other because of the approval of several spot Bitcoin ETFs by the US Securities and Exchange Commission in January. With previous halvings, the only expectation was that the reduction in supply would make Bitcoin scarcer and therefore more valuable. And it did, not once or twice, but on 3 separate occasions. But the story has become even bigger in 2024 because of the Bitcoin ETFs. With thousands of institutional investors across the United States now buying or intending to buy Bitcoin through these ETFs, the demand for the leading digital asset has increased by multiple folds, much more than the daily supply. In a matter of weeks, the supply will be further reduced by half, causing a never-before-seen supply-demand imbalance for Bitcoin. During his latest interview with Crypto Nutshell, Saylor discusses his outlook for Bitcoin in 2024 and beyond. He also talks about the next path for Bitcoin after the April halving. According to the renowned business executive and billionaire investor, we now have a very limited window to buy Bitcoin cheaply before its price completely blows through the roof and becomes unaffordable for many. We will now bring you clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I'm not surprised they're successful. I expected them to be very successful. I think there's 10 years of pent-up demand. They're the most eagerly anticipated development in Wall Street. This is like Bitcoin coming public. It's like the IPO of Bitcoin, except it's like 10 companies simultaneously taking Bitcoin public. Because Bitcoin's a commodity. It's not a security. So the idea that BlackRock and Fidelity and Grayscale and Bitwise and ARK, they're all taking Bitcoin public at the same time is a big deal. The fact that I'm not surprised they're successful as ETFs because Bitcoin's the apex ETF. The other ETFs are based on oil, like let's say commodity ones, oil, gold, platinum, silver, palladium, market baskets of commodities, natural gas. All of these things are defective as investment assets because physical commodities aren't scarce. Physical commodities can be manufactured in any amount with additional capital and know-how. So ultimately, the best of them is the gold ETF. But if a bunch of money flows into a commodity ETF, that just actually fuels capital into commodity producers. They just dump that commodity on the market, the price gets held down. So commodity ETFs were never that great an idea. On the other hand, comparing these Bitcoin ETFs to the S&P index, the biggest ETF and maybe the biggest development on Wall Street was the launch of the SPDR, SPY, in 1993, about 30 years ago. And the idea that you could create an ETF that represented a market basket of 500 stocks, that was big. And especially that was big because that came along at a point where people had lost faith in the currency as money, as a savings technology. So the S&P became money and that ETF became the monetary index. And that's why today amongst, that's the most successful ETF. If you look at SPY and all the S&P index type ETFs, they have most of the capital in them. But the problem with those ETFs is that stocks also are not conservative. So if I increase the price of the stock by a factor of 10, you're getting more equity. Or if another way to say it is, if I take hundreds of billions of dollars of cash and I buy the ETF, like S&P ETF, the ETF has to buy all 500 stocks pro rata, which means they're going to have to go buy Tesla and Apple and Google and Meta at any price. They're price insensitive, even if they're overpaying. So when they buy it at any price, what they're doing is they're creating more equity because they're encouraging those companies to issue more stock. And then, of course, this is common sense. If the price of your stock doubles, the employees in the company with stock options, they sell the stock, right? They sell the stock option. When they sell the stock option, you put more stock on the market. So the price creates supply. There's a price supply elasticity there. And that's the same as you have with commodities. It's the same as you have with REITs, real estate investment trusts. And it's the same thing with bond funds. When you have capital flows into all those other asset classes, you create supply of that asset. They're not scarce. Bitcoin's unique because no amount of capital flowing into a Bitcoin ETF is going to create any more Bitcoin. What we've got is 900 Bitcoin a day. And around April 16th to April 18th of this year, we're going to go to 450 Bitcoin a day. This will be the halving, but it will be the single most consequential halving in the history of Bitcoin.
According to the latest data available on BlackRock's website, the world's largest asset manager had, as of February 23, 2024, amassed over 130,000 Bitcoin for its iShares Bitcoin Trust, IBIT. BlackRock's Bitcoin ETF now holds at least 130,231.29980 Bitcoin, with a market value of $6.64 billion. As of February 14th, IBIT held around 109,609 Bitcoin. This means BlackRock has bought over 20,000 Bitcoin in 9 days, with no signs of slowing down. According to data from BitMEX Research, BlackRock and other spot Bitcoin ETFs raked in over $232 million on February 23rd, with IBIT leading the pack at $167.5 million in net inflows. Fidelity and ARK Invest followed with $52.5 million and $34.5 million, respectively. Grayscale's GBTC also saw the least amount of outflows since launch, losing only $44.2 million on Friday. All 10 U.S. spot Bitcoin ETFs have now recorded over $5.5 billion in net inflows, despite GBTC's $7.4 billion of outflows. Saylor believes this unprecedented demand for Bitcoin will continue for many years to come. During the interview, the former MicroStrategy CEO speaks further about his outlook for Bitcoin in 2024, as well as the next era for the leading crypto asset, which he says will last until 2034. Here are more clips from the interview.
I think this is going to be a good year for Bitcoin. I think we started out the year with the ETF approval, and that was a big milestone. I think that the success of the ETFs is another milestone. I think that the halving in April will be a third positive milestone. I think those three things are going to drive momentum, and I think all the marketing wars between the Wall Street firms is going to be positive, and I think the assets being normalized throughout the mainstream investment community. And so I think it'll just keep generating momentum from here. I think it's also worthwhile, I think, to make one point. I think that we're living through the Bitcoin gold rush era. And I think the Bitcoin gold rush era started January 2024. And I think it runs until around November 2034. So it's about 10 years. And I'll tell you why. Because 93.5% or so of the Bitcoin was mined at the beginning of this period. But in November of 2034, 99% of all the Bitcoin that will ever be issued will have been issued. And so that halving is very symbolic. People talk about Bitcoin, issuance coming out over the next 100 years, all the way till 2140. But the truth of the matter is, the last 100 years, you're only getting 1%. So and actually of that 1%, 90 basis points of it is coming in the 12 years that follow 2034, and then it's 10 basis points, 0.1%. But practically speaking, all of the block rewards are de minimis starting in 2034. It's 1% over 100 years may as well be nothing, because the daily volatility and the daily trading volume is going to render that to be somewhere between third order, fourth order, fifth order of magnitude. So that being the case, really, this 10 years is your best chance to get Bitcoin, right? This is the gold rush, because this is the period where there's still a lot of FUD. There's still a lot of uncertainty. People still aren't sure. They don't understand digital energy. They don't understand digital capital. They don't understand digital property. There's a lot of debate in the community. Is Bitcoin a currency, or is it a property? Or, there's massive debate. And a lot of people say, well, it's a currency, and since it's not legal tender, or because it doesn't move fast enough, or I can't buy coffee with it, it's not a good currency. So there's a lot of confusion in the crypto community. There's a lot of mainstream regulators. They think it's a currency. So you see bankers say, oh, it's a currency, but it's not a good currency because I can't buy coffee with it. I can't buy things online with it, and it's too volatile. And they think that's a criticism. And so they criticize it. And then people that think that they know what they're talking about, they hear some famous person say, well, Bitcoin is not a good currency, and or the government will ban it, or it's not as good as the dollar or something. And so they get afraid. And they say, well, then I trust that guy, so I'm not going to buy it. So a lot of people are criticizing it for the wrong reason. A lot of people misunderstand it, and that creates lots of chaos, misinformation, stupid, misleading stories in mainstream media. It creates like bad takes on Twitter. It creates all sorts of confusion amongst Wall Street analysts. And so all of that fear, uncertainty, and doubt, and just basic confusion, and then misunderstanding, that causes a slow growth in demand, right? Like, demand is growing, but imagine how much faster it would be growing if everybody had spent 100 hours, right?
In other very related news, MicroStrategy's Bitcoin buying days are only just starting. Though Saylor has repeatedly stated that MicroStrategy will never stop buying Bitcoin, critics believe his words are grossly exaggerated. Yet, the billionaire continues to prove every critic wrong. On Monday, he announced that the software and Bitcoin development firm had purchased another 3,000 Bitcoin, bringing up its total holdings to 193,000 Bitcoin. Saylor's post reads, MicroStrategy has acquired an additional 3,000 Bitcoin for approximately $155 million at an average price of $51,813 per Bitcoin. As of February 25th, 2024, MicroStrategy now holds 193,000 Bitcoin acquired for approximately $6.09 billion at an average price of $31,544 per Bitcoin. Though some Bitcoin investors will consider buying at 51,000 as buying high, Saylor has proven again that Bitcoin is still very cheap compared to what's coming in years and even decades down the line. What are your thoughts on Saylor's Bitcoin outlook and MicroStrategy's latest Bitcoin purchases? Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.